Hey bro, market still looks okay lately, but why you sound so cautious lately? Silent stare. Because not everything green means safe. The pros are making moves, some as early as 2022. I've seen this signal before, it's the US Treasury bond yield curve. Like black clouds before a storm, this yield curve turns before each crash.
Like a weather forecast, huh?
It nailed every recession over last 100 years from 1924 except two false positive in 1966 and 1998. A hit rate of 89% or 16 recessions out of 18 inversion. On recent 20 years from 2000 to today it nailed 100% 3 out of 3 recessions the 2000, 2008 and 2020, and now, it's flashing again since 2022. And due to contributing factors such as QE by Fed, recession had yet to occur. The 10-year to 30-year yield curve is flat or inverted.
As shown in yield graph.
When Fed reacts late or lag behind the UST bond curve inversion and increase interest rate, retailer often gets crushed. If this turns out delayed recession as the bond curve been screaming to protect you since 2022, and if you fail to listen and crash,
you need 100% gain just to break even for a 50% drop.
So, you anticipate crash? Nope, I'm preparing. The curve is inverted. I don't know when recession or crash will come, I want to be ready if they come. Using bond yield accuracy of 89% hit, I am monitoring using my 3M price indicator divergence to support entry. In February 2025 it was screaming sell and market did crashed in April 25th, though it recovered as fast as it crashed. Check out my other video if that was a bear start or new rally to know more. Anyway, Fed has trillions in bonds that QT can't unwind fast enough since 2009. The US government faces trillions in rollover debt. By end 2025, they would be running out of cash. Even interest is unaffordable by 2025. Financial repression too. Late the 22nd of May 2025 US bond auction, Fed stealthily bought bonds to suppress yields which otherwise curve even more inverted. There are telltale signs all over. Central banks piling into gold and institutional and hedge funds, switching into Bitcoin since 2024. No sign of stopping where gold and Bitcoin all making new highs, where stablecoin also push up Bitcoin. Note Genius Act June 2025. On June 2nd, 2025, the Genius Act advanced regulatory standards requiring stablecoin issuers to back their coins with US dollars or short-term US Treasury debt, indirectly increasing Treasury demand through reserve requirements, an effect that analysts suggest may help stabilize bond yields and delay recession signals linked to yield curve inversion.
Retailer hasn't linked the pieces yet.
Hedge funds are waiting for a major market correction. Warren Buffett has been selling shares and building a large cash position in short-term Treasury bills, 3 months to 1 year, since 2022, citing concerns about market valuations and the yield curve. They're preparing for opportunities and I follow the big whales' moves. Retail investors often jump in too early. This might be our best chance to thrive in a downturn.
The chart tell no lies.
Few will catch the bottom, but I'm preparing. Are you? Bond curve is screaming, and my 3M divergence theory is watching for the storm like a weather forecaster. Disclaimer. Note this is not financial advice and educational. Please do your own research and due diligence. I'll see you soon in my next video.